All these are the ground basic rules. Once we follow it, and we will have a very good interaction workshop. So before starting our workshop, today's topic is transaction monitoring. Do you have any idea on the transaction monitoring or any basic idea, or you have any work experience or just came across transaction monitoring? Please feel free to share with us before jumping to the topic. Hello. Any idea on transaction monitoring?
Uh, yes, Hemant, we do have actually I'm from a monitoring background. I've been in the industry for more than 8 years.
Okay.
Actually, the subject is quite vast. How we can share our
Okay.
knowledge.
Okay.
So here in transaction let's begin with the retail banking.
Okay.
Retail on mute.
Guys, so if someone is speaking, could you please be on mute so that we can have a good session? Hello.
Uh,
Hello. Hello.
Hemant, am I audible?
Yeah, you are audible now. Yes.
Transaction monitoring, as I said, it's a vast subject, and we will start with retail banking. How it
Okay.
goes is, uh, I mean, usually the customers, once the customer is onboarded, we have the customer's KYC in our database, and based on their profile and their spending pattern, there are certain softwares where the transactions are. Please go on mute, please. Where the transactions are ran on that software, and that software will generate certain alerts. Alert is nothing but uh, an anomalous transaction or an unusual transaction which deemed investigation. These alerts are created based on certain criteria. These criteria can be based on typologies and also thresholds and detection scenarios.
Okay.
So I'm giving a broad outline how the alerts are generated. So for example, if the detection scenario is for a high risk jurisdiction, so all the transactions which, for example, any wire which involves a high risk jurisdiction. For example, if Hemant is sending a remittance to Nanda, who is residing in UAE, for example,
Okay.
he is sending a wire a low risk region, that is from US, for example, and UAE being a high risk, we have a high risk jurisdiction classification. For every bank will have its own high risk jurisdiction classification, and also it's based on the some entities recommendations we have. There are so these high risk jurisdiction, for example, Hemant is sending a wire to Nanda, who is residing in UAE, where this is the criteria the system has captured or identified. So when UAE is involved, it will generate an alert that there is an outward or inward remittance received from Hemant, Hemant on Hemant's account. For example, if I'm monitoring Hemant's account,
Okay.
since UAE is involved in this, an alert will be triggered. That is called a detection scenario. That is one of the scenarios. Like this, there are around 30-35 scenarios, and it depends on it differs from bank to bank. So we investigate. when the alert is generated, the investigator, what he or she does is goes through that transaction. For example, Hemant and Nandakishore both are family members, a brother, both are brothers, for example. So when the investigator goes and checks the KYC of the customer, we'll understand that Hemant is working in New York or some XYZ place in US, who is regularly sending funds to UAE, like around 5,000 USD or whatever the threshold. If it breaches, that alert is generated. So by looking at the surname and address, we both may have a common address. My address in the reference, if we are able to see some connection, if the investigator is able to establish a connection and justifies for what the remittance is being made, we since we are we are investigating Hemant's account, we will look into the source of funds.
Okay.
So your source of funds, Hemant's source of funds is a regular salary credit, and he does ATM transfers or ATM withdrawals, some online payments, online purchases, bill payments, all personal related transactions we are able to see. So
Okay.
by this we understand that by looking at the surname, my surname and Hemant's surname is similar. So uh, we can come to a conclusion that both are related individuals who is regularly remitting funds to another individual who is residing in UAE. And since the relationship established, this may not be an anomalous or unusual transaction. And this is being sent regularly. And since the source is legitimate, such alerts
Okay.
can be closed from
Close.
investigation point of view.
Okay.
This is
Okay.
how the investigation happens.
Okay. Thank you so
Uh,
much for sharing such a nice presentation, nice information. Yes, you are adding more points. Could you please add more?
yeah. So this is one of the scenarios.
Okay.
Like this, we have around 30, 35 scenarios. Like same originator, same beneficiary, multiple originators, same beneficiary. Such scenarios are there. So before
Okay.
going into those scenarios, first we will have to understand what AML is. So
Okay.
as we all know that since we are into this domain, everyone, it's a fundamental rule that AML, it involves three stages, that is placement, layering, and integration. So
Okay.
when we investigate, we will just look into which stage the transaction falls into. So based on that, however, we will not write that this is the stage involved. This is just for our investigation part. Okay, when the customer makes a cash deposit at any of the branches, and if that cash deposit breaches the threshold, an alert is generated. For example, uh, cash deposit of 15,000 euros or 10,000 US dollars is deposited into the account. So the it is also different from country to country, because for some countries, I'm sorry, from country to country it differs. In India, it is 50,000 euros. I mean 50,000 INR. Like that, for euros, it may be 10,000 or less than 7,500. Uh, for US dollars, 10,000 may be the threshold limit. So when this threshold, there is an alert triggered on that particular customer. So
Okay.
like that, there are so many alerts here. So this is for cash, and we also look into different mode of payments. Mode of payment in the sense, there is cash deposit, that is one mode of payment. Remittance, wire transfer, that is another mode of payment. Checks, checks and cashier orders, this is another mode of payment. And inter-account transfers, that is within the bank. When within the bank, for example, if it is Standard Chartered, when funds are moved within the bank from uh, Standard Chartered customers A to Standard Chartered Bank customer B, that is interbank transfer. It is inter account transfer within the bank. And also in some countries it is called SEPA, National Electronic Fund. In India it is NEFT, and in Europe it is SEPA. Some parts it is SEPA. It's electronic payment.
Okay.
So how we do transactions online here, this in similar way, they have these online transfers. So these are
Okay.
different modes of payment. And each mode of payment can have a certain threshold. So
Okay.
all these are threshold based and also typology based. These typologies are the suggestions are given by FATF actually. So these typologies, uh, like if, I'll give you an example. A potential structuring, for example, it is potential structuring. In this typology, what the transaction pattern, how it goes is, the customers usually break up the transactions into 4 or 5 in a period. For example, in a quarter or in a month, I have around 100,000 euros. What I will do is I will divide these. I'll divide this cash into 3 or 4 parts, into 20,000, 25,000, 30,000. So it different breakups the customer does, and deposits at regular interval. It may not be exactly 1 week or 10 days. It can happen over a period of 30 days to a quarter. So
Okay.
potential structuring, what the scenario does is the system identified that some kind of structuring has happened in the account. So it will compare those transactions with the previous quarter's transactions. If this
Okay.
is a unique one, those transactions are identified to be unique for that customer in that particular quarter or in that month, what the system does, it will pick up those transactions and it will generate an alert. So that is one kind of scenario. So
Okay.
this is how it goes. And the system, in most of the banks now, every bank is spending millions of dollars in setting up an AML unit. So every bank, I think, has a robust system where uh, the alerts are generated, and half of the work is done by the system, and
Okay.
just the decisioning part, whatever decision we have, the investigator has to take. Human intervention wherever is required is done by the investigator. And in the investigation, what the investigator does is we are supposed to write a report, reporting in the sense, if we see any anomalous transactions or unusual transactions activity happening in any account, we will escalate it to the next level. So in the investigation part also, there are different stages, that is level 1, level 2, and level 3 stages. This is also specific to bank. So in this, at the L1 level 1 stage, the investigation may not be that in depth. Whatever the alerted transactions are there, or whatever the detection scenario for what that account has alerted, the investigator is supposed to investigate till there. When after I investigating those transactions, and if the investigator requires any information, that is, he or she is not able to conclude or justify what is happening in the account, is supposed to raise a request for information with the branch or RM. This is also specific to most of the banks, because some banks may not directly interact with the RMs, and some banks are not supposed to interact. So they have another channel wherein there is a separate team sitting where all these requests are sent to them. So they gather the information. For example, if I want to, as I have given an example, when an account is investigated in the initially I have given an example, Hemant and Nanda. So I am unable to
Yes.
justify why Hemant is sending money to Nanda every month. So I do
Okay.
not know the relationship. However, since the source is legitimate, 50% of the activity is fine. But at the same time, since this is a regular thing happening, so I need to understand why this transaction is happening regularly. So what I will do is the investigator will raise a request for information. Am I going fast, or this
No,
pace is fine?
this is good. Yes. We can confirm with everyone. Everyone is good, right?
Yeah, yeah.
Yeah,
Hello,
yeah, this is good.
Thank you.
hello,
So
hello. Just one
Yeah,
question.
this is good. No worries.
Uh, uh, like if the pattern, if the pattern of the transaction is like not in the last quarter, if it's like somebody sending, some of my relatives sending money from some Middle East region, which is once in a year, say for example for Christmas, or once in a year, say for example for Eid, but they don't send it through the bank, through some channel like uh, Western Union or some other channel. Will that also raise a trigger?
It also depends. It's like this. When
Hello,
I am
voice is breaking.
sending, please go on mute. How am I?
I guess we're getting an echo of your voice. I'm muting myself. Maybe it's an echo my from.
Am I audible now?
Yes.
Yeah, it's audible now. It's clear.
Yes. It's like this actually. When a customer is sending funds to anyone through any money exchanger, that is Western Union or UAE exchange or any exchange, if it is going through your account, if you are giving a check to the Western Union, if that amount is breaching the threshold, as I told you, this is if you have not given that check, such any checks passing through your account in the past 12 months, if the system, if that scenario is that criteria is there in the system, then what the system does is it will definitely generate an alert. It will say that that is called, it's a change in behavior. You have never given any check in the past 12 months. So suddenly you have started using check. So that it can detect, the system can detect and generate an alert stating that this is a change in behavior what is seen in the account. In the past 12 months, there is no check there. Suddenly there is a there is an instrument involved. So what is that? The investigator is supposed to check. What investigator does is they'll he or she will retrieve that check copy, and the check copy, by looking at the check, we will see that so and so person has, this the beneficiary is so and so, that is Western Union money transfer or UAE exchange. You will send. So who is the ultimate beneficiary, we will not know. In such cases, we will have to request for information. We will have to ask for information that UAE, West funds are being sent to UAE exchange or Western Union or any other money exchanger, but who is the ultimate beneficiary involved in this transaction, we do not know. So we will ask for that information. Once we get the information, we will try to establish the relationship and the purpose. However, we will also look, this is always important that we look into the source of funds. Your source of funds can be legitimate, but we do not know, because AML will also involve terrorist financing, anti-money laundering and counter-terrorist financing. This is what our job is. So the terrorist financing will involve the funds which are generated legitimately also. So it is not that if I am funding any terrorist organizations, it doesn't mean that those funds are illegitimate funds. My hard-earned money, I can fund any organization. So that is important. Ultimate source or destination of funds is always important. I hope I have cleared your doubt.
Hi, I just have one question.
Y-
Are we trying to say that the transaction monitor are triggered through the systems, or is it
Could
a manual
generated.
activity?
No,
Okay.
no, no. It is system.
Hi.
It is not
I
a manual activity.
So we assume that there's a business rule and any threshold that will be captured. Anything above the threshold, this system alert, it will alert through the system, and that's how a team of specialists will get to know that there's been a suspicious event driven, and they'll
right,
try to
right.
investigate on this.
Yes, I just want to
It,
add up to Nanda. I'm audible, guys.
Yes.
yeah.
Okay.
Yeah, it's audible. You can go ahead.
Guys, it's first of all we need to understand how the alert gets triggered. It's not only a system driven, it's also a manual alert which gets triggered. It's not only based on the, whenever there is a breach of certain thresholds, the alert gets generated. So just now, my friend, and whatever he has explained, that's absolutely correct. Apart from that, whenever you see when there is a live payment which gets screened and there is a name hit, so ideally they send an information or they create a manual alert stating that there is a name hit, and they'll ask the monitoring team to do a review. So that's how the manual alerts gets triggered. And whenever we talk about, yeah, go ahead.
You are right. Yes, exactly. Manual alerts are also triggered.
Right.
Those are through unusual activity report. UARs are raised on the customers.
Perfect. So,
So how
I, yeah, go
how
ahead.
UARs also. You go on. Later I can explain.
Great. So, whenever we say there is an alert which got generated, and let's say when we talk about the money transfer funds from one country to another country through MSBs, let's say there are a lot of MSBs in and around UAE, which are regulated, which are non-regulated. So, whenever there is a breach, every account has a individual threshold set. And whenever you see there is a breach, we cannot straight away go and ask the front end or front office for more information. However, every bank has an inbuilt system which says the transaction parameter that's called nine party fields. I think most of guys, you know how the nine party field works, you know, starting from the initiator, who has initiated, from where the things got initiated, which bank, which country, then it goes to the dollar clearing house, that is account clearing house, ACH. Every bank has that individual. From there, it gets drilled down, like upstream and downstream kind of thing. So it's called a nine-party field. So in transaction monitoring, nine-party field plays a vital role. Unless until we understand how this cycle works, it's very tough to identify the red flags. Even there is something called a nested correspondence, a correspondence bank. So these are things, which have been termed as red flags, to understand more and more on that. And whenever we talk about transaction monitoring, there is no offense towards KYC world, but transaction monitoring plays a vital role in customers' information, because when we categorize a customer, so there are four stages. Stage one is CIP, where we have the customer information. Stage two is where the CDD happens, or the risk ratings gets selected, or gets identified. What kind of customer he or she, or a company. Stage three is a cap, where the customer acceptance policy that we talks about, whether can we onboard the customer or not? Can we onboard this entity as per the risk? And the fourth stage is ongoing monitoring, which is nothing but the transaction monitoring. And every account, every individual, or everyone has their own certain thresholds, applied to their accounts. Any breaches of that could lead to an alert, a trigger, which is termed in today's world as an alert. So we need to understand why the alert gets triggered. Every bank has their own tools, own system, own thresholds. Let's say standard SCB has a different set of, you know, uh, enhancing or the alert triggered mechanism, wherein JP Morgan has a different. So when we compare, we need to understand the risk behind that. Today, UAE might be a risk, or Dubai might be a risk to US. But let's say, when me sitting in Dubai, and when I look at my checklist, India might be risk to me. So risk, we cannot categorize risk in a simpler form. So every country has their own risk pattern, and every account has a different patterns. So any red flag which has been identified by the system, or a manual inventoration, or a manually which has been identified saying that there is a potential risk, that needs to be mitigated, which happens at the monitoring level. So, I mean, just to add on to these things, to Nanda, you know, so transaction monitoring is something where it's like a never-ending thing. KYC, we do it once in a year, but transaction monitoring is anytime, anywhere it might get triggered, and just we have to mitigate. And moreover, it's like when you get in more and more into the depth of the subject, where you explore yourself, the repatriation of funds, cross-border wire transactions, bitcoins. I mean, there are a lot of things that we need to understand, but the most important thing is the nine-party field where every information gets captured. Every means every information. So, and we all know like correspondence banking is more vulnerable towards the money laundering, where banks which don't have the access for dollar clearing house and they go ahead and they opt the nostro vostro accounts, and that plays a major and vital role in money laundering. Yeah, guys.
Yeah. Venkat, thank you so much, and Anna, thank you so much for discussing the great details. And while going presentation slide by slide, we can discuss more in details and in depth. I hope
Ye-
everyone is good now.
yes, Hemant, yes.
Great. So this presentation is not an overall description on transaction monitoring, but only to understand you and make you comfortable on transaction monitoring. So all this information we have gathered from the group who are SMEs and have shared their knowledge on transaction monitoring. It is not a complete guidance, but it's only like a assistance, uh, s- like a guidance. I mean, like a support for everyone. So as we know that transaction monitoring involves so many things. So I have gathered based upon discussion with the members. I have gathered three definitions on the transaction monitoring. So first one tells about, it is a process that every financial institution to do monitoring their clients account activities on a regular basis based upon their risk associated to bank by them. So I think, we have already discussed this point. So based upon their internal policies, so on their risk categorization, so they will perform the transaction monitoring on them. Second point talks about, it's also an ongoing process where financial institution must carry out their customer accounts to ensure carry out their checking on their customer accounts to ensure to an maximum possible extent that transactions are in with line in their profile not involved. Could you please be on mute? Can everyone can hear now?
Yeah.
Hello?
Clearly audible now.
Yeah. So we have already discussed all these 2 points, and the last point is, if the second point is in the KYC, the product offered to a customer is recorded. However, you don't know how the customer is utilizing the products. So the products, in the sense, it may be investment products such as, equity funds or hedge funds or transaction. So based upon the product, transaction monitoring also based upon the products the clients used. So transaction monitoring analysis the usage of the products, that is monitoring how the money is utilized. So basically they will uh, uh, they will perform checks on the money in and money out concept. So, for example, in asset investment organization, short-term trading will not allow. So it is illegal in nature in asset management. For example, if I am buying a shares of worth 1,000 rupees, and I am and in next week in I came to know that it is, I mean, it's going down, or maybe I want to just move my money to launder funds, so I will just sell away uh, after purchasing it. in a week or in a time period. So it talks about the third point talks about the utilizing the products to launder the transaction, launder the money laundering or terrorist financing. Any queries on this on these definitions? Okay,
No.
great. Because because we have already discussed, I mean step by step. So what is the purpose of transaction monitoring? Why banks need to perform the transaction monitoring, or they invest resources they to do transaction monitoring? So to alert FI and banks for activities which appear to be unusual or suspicious for further examination and investigation. It should be distinguished from transaction screening, which involves the screening or filtering of payment instructions or wire or fund transfers prior to their execution in order to prevent from institutions from providing services to unsuitable persons or entities. I think this is a self-explanatory. Any queries on this slide?
No,
We can discuss right away. And this is a basic rule
No,
every
Hemant.
financial institution or banks will follow. And the scope of coverage for a transaction monitoring system to be effective, the scope and complexity of the money monitoring process should be determined on a risk-based approach. So everybody knows that banks will follow the risk-based approach in KYC, as well as a risk-based approach in transaction monitoring as well. So this means that an financial institution banks may need to undertake different levels of monitoring within its different business unit depending on factors such as the activities of the business unit, its customer base, and the country in which the unit operates. So for example, a big bank such as for example, Citibank, so which has many different units in it, and that business units may operate in different countries, so different countries have different regulations, all differ with one, all are different from each other. So they unit they must have different tools set up and different rules to set up in their tools. So any queries or any clarifications on this slide?
No.
Okay. So I just do not have time. I just screenshot and just updated this sheet. This is a general process flow map or a process cycle, you can call it as. So if, for example, as we discussed already, so if a trigger is open or an event occurs, so we will start monitoring. So this is a basically a cycle of a transaction monitoring cycle. So first an event occurs, then a transaction. Uh, so it start with transactions. So we will start investigating the transactions. So once we decide it's a false positive and close the case, and it might be also require more further investigation. So it will just go to the next level, and we find it is suspicious, then it goes to the next level. Then the other team, maybe a compliance team or MLRO, will look into more details and find if it is need to be false positive or we need to escalate it more. So this is a basically a monitoring cycle structure. How does it looks like? A rough idea for everyone.
and Hemant, just to add on that, a,
Great. Okay.
every, every suspicious activity or an event will not end up filing a SAR.
Yeah,
So
that's
when we
what
say,
you can see
right,
here. Yeah, that's what you can see here. Every stage have the false positive. It means we are closing the case right away if we are unable to. I mean, we have concluded that that case is no more a suspicious or a kind of threatening case. We will just close the case right away.
right, because when we talk about SAR, SAR is like a huge topic where a lot of criteria
Yes.
comes in picture, and just for FYI for everyone, because every bank has their own way of handling things. and though it is a potential risk, still they will not go ahead and file a SAR. And if we file an incorrect SAR, that will be a fire back to the organization or to the bank, and we might end up paying a huge fine to the regulator or to the central bank, whichever we are. I mean, wherever with whom we are filing it. So SAR is like something very uh, crucial, part of AML. Yeah. Go ahead, Hemant. It's nice.
Hello, hello.
Yeah.
Yeah, guys, just have a small disconnect in this particular part. My name is Amrit. Just to for the recognition purpose, I think the flow which the flow which Hemant is probably explaining it. This flow is much related to transaction screening process. I don't think it is a transaction monitoring flow per se. Okay, this is the first part. Second part, I had a little disconnect about the all suspicious activity ends up in filing of SAR, and if you file an incorrect SAR, there is penalty provided to the banks. I'm not clear or I'm not sure about that part, because if I the thing is, suspicion in itself will be a subjective matter. The bank has all the discretion to consider any case as suspicious or unsuspicious or non-suspicious. Provided non-suspicious, they have their substantial reason to substantiate the fact that this alert has been alert has been knocked off as non-suspicious because of these many grounds. Okay, if I find something suspicious and I report it to the regulator or the financial intelligence units can reject this STR or this SAR basis on their discretion. But there cannot be any penalty or any charges laid back to the banks or to the financial institution, highlighting the fact that you submitted a wrong SAR. I don't think so. It is currently happening.
I
So
agree
sorry,
with you because
I'm
yeah.
confirming that the speaker about SARS is correct. There is absolutely no financial or sanction penalty from the FIUs or any other institution for the government as it relates to filing a SAR. The threshold is very low, and it's up to the institution to actually file that SAR, and it's up to the financial intelligence unit to accept or reject it, but no penalty. Okay.
Exactly.
I agree.
Yeah. Thanks for the info. Yeah. Yeah, I agree.
So anybody have experience to file any SAR suspicious activity report in your experience?
Yes.
Oh,
Yes.
great. Okay. Okay. So I have filed once in my trade monitoring experience. So correct me if I'm wrong. So if we are filing a SAR, we will just update the transaction details such as the account owner name, the nature of account, and the nature of transaction, and nature of currency it is involved, and the organization head of the compliance and their details, and we will just update that form and just submit to the compliance team for their review, and the compliance team they will just review it. Once if any corrections are required, then if they feel that there are corrections, everything is good, then they will just submit it to the regulator. Correct me if I'm wrong.
Yes. Hemant, you are more or less correct on that part. Like I will tell you exactly how it happens. Obviously, the process will differ from bank to bank and institution to
Correct.
institution, if you say that. Now, the process, how it lies, there is a two-way process. First will be the analyst who works on the alerts, establish the suspicion. In the analyst position, there can be a maker and checker and so on and so forth. Then once you establish the suspicion, you have to make a ground of suspicion. When you write about the SAR, when you want to report the SAR, there has to be a paragraph or incident summary report which can be categorized or which can be called as ground of suspicion. In your ground of suspicion, you can provide the customer information, the transaction details, the past history transactions, the exact transaction or the particular transaction on which it raised suspicion, what was the ID details or whatever the details are captured for this particular customer, and why you feel it is a suspicious transaction. Maybe there can be chances like this customer is sending to multiple receivers across different countries or different regions. That is my
Okay.
ground of suspicion. Along, I will back it up with enough of customer data and the transactions history of that particular customer, and also the other details. Then only I will report it to the MLR office, who is the sole owner for reporting SR for any particular bank or any particular organization or entity. They will check entire details. They will check for the flow of the ground of suspicion. They will check for the information inputs are correct. They will check for the amount involved is correct, whether the flow is correct, whether all this suspicion is clearly established. Then only they will report it in a prescribed format, whether it's an XML file, whether it's burning the CD or something of that sort. Depends on the kind of regulator they are dealing with.
Okay.
Hello. I just have one question. It's regarding while one of the
Yeah.
transaction, one of our staff
Hmm.
noticed that asked a PAN number from the client. It's an Indian client only. So the client gave the PAN
Okay.
number, but we found in the records uh, the client had a different PAN number. We thought that
Hmm.
the analyst initial when the client was onboarded, there was a mistake would have been made when putting the PAN details. We didn't do a
Hmm.
tipping off to the client. So the client, it'll take some time. Then we downloaded the scan image, the PAN which was onboarded when which was taken out when it was onboarded. So the PAN,
Hmm.
I mean the name surname was similar, just the first two names initials was different, like Arun Kumar Mohanty, A.K. Mohanty. Date of
Hmm.
birth was exactly matched.
Hmm.
Photo was not
Hmm.
clear in the scan, but almost matching. So basis this, we raised the UAR that how come one person can have two PAN numbers and both of them active? And I mean, in the conversation, we got to know that he uses different PAN cards for different transaction. I didn't
Hmm.
delve much into that because I was just at the initial stage. I was just an
Hmm.
analyst at that. I don't know much about it,
Hmm.
and I didn't delve
Hmm.
much. But how does it work? I mean, can it happen, or is this kind of some kind of a UAR that is raised, or something suspicious on this?
Okay. Now, if you ask me, the thing is here we need to identify whether it's a fraud reporting kind of transaction or activity, or whether it's a suspicion related activity. If you consider it as a fraud related activity where there is the ID is being forged, or the customer is using multiple or different PAN numbers just to clear his credit history, or clear his credit bureau information, or he is deliberately using multiple PAN numbers to create multiple accounts or multiple identification. So in that case, it will be more related to fraud reporting perspective. But obviously, having said that, we can monitor the transaction of the customer, and if there are multiple ID documents involved for the same particular customer, we can always include the same in our SAR report as well. We can also make a statement the customer is having multiple IDs. But mind you guys, if you say the customer is having multiple PAN numbers, that will also raise the suspicion in the eyes of FIU on your banks or your financial institutions KYC standard. Okay, you can always get back a query from them, maybe on the later part of the months, that can you tell me how this customer is having multiple PAN numbers, and what is the PAN number you have recorded in your system, and while recording the PAN number, have you done a verification fit and proper check for that particular document?
Agree with you.
Okay.
Thank you. I mean, totally agree with you.
Thank you.
How come this can be a I mean, a person might lose his PAN and then some
Exactly.
unfortunately
It can
finds
it
it.
can happen. Now the thing is, you have your PAN number and it is there in your wallet, and unfortunately you miss your wallet. So what happens? You have to raise an FIR, or report it to the nearest police station, and then with an FIR, you can always reapply or reissue your duplicate PAN number, or altogether apply for a new PAN with that FIR number. But it has to be documented somewhere, and same has to be recorded or same information has to be passed on to the banker itself, because whenever I get a PAN number, I will obviously check it in on our government website whether this PAN number is valid or not. If I'm getting any such information, because if that PAN number is reissued, I will get the information like this PAN number was reissued, or this PAN number is a newly generated, or this particular customer already has a PAN number. It will also show me that. So if the thing is, you can have multiple PAN numbers, but provided the last one is discarded, or the last one is lost, or something of that sort. So at one point of time, you can only have one PAN number for
Yeah,
individually.
because in today's world, the PAN number is such a most important thing that I guess the
Exactly.
record of PAN number will be anywhere. So I guess there should not be two PAN numbers for a particular individual.
No,
He
it
can
cannot
retrieve
happen. It can,
old one.
individually, you cannot have two PAN numbers. Or suppose you are owning one company and you have one individual PAN number, and for that company also you have a PAN number. So that is the case. Then only you can have two PAN numbers. But individually, for on your name, your date of birth, there will be only one PAN number.
Okay, okay.
So to we give more information on it, to tackle this issue, Government of India has issued one more regulatory or a thing that we need to link our Aadhaar card with our bank accounts, or to the matter our mobile connections as well. This is only for India.
Okay.
Yeah.
Yes, yes, yes. So it is just like what we can say a social security number in US, something of that sort.
Yeah.
This Aadhaar card is nothing but it's a universal document, and which can be utilized as a one document for all the KYC, all the credit history, all the banking information, or the accounts details captured in one particular ID. So that
Correct.
is the nomenclature for that
So
particular ID.
let us
The
move one
background
more
behind that ID. Yes.
slide. So your transaction. So, and it
Like,
means any transaction or
excuse
act.
me, Hemant, I think we
Yes.
need to mute someone's speaker. I think there is a lot of distortion in the video. Do I need to
Yes.
put it on mute or something?
So, everybody can able to hear my voice
Now
now
it's fine.
clearly. Okay, great.
Now
Yeah,
it's
So
fine.
as we see in,
yeah, now it's
okay.
fine.
So, okay. So as we seen, it is starts from the, event or a transaction when it triggers. So how it triggers and what will happen, we will go through the slide by slide. So it means any transaction or activity breaches the threshold, then the account or customer profile will get trigger, or a transaction will trigger. Okay, so the next point is, transaction monitoring systems are usually rule based, as well as, or rules are, added to fit the typologies required by client or industries or local, or to meet local regulations to the matter. And the new, the new systems are, as the name suggested, self-learning. So there will be a threshold set for each customer segment. It depends upon various factors such as, geography, locations, or the business of the customer, or if it depends upon your entity as well, where you're working, entity type as well. If you are working for MSB, so the rules or typologies will be set, updated as per the industry. So if the transactions amount breaches the threshold and the detection scenario logic system triggers an alert. Alert will contain all the related transactions which breach the threshold and rule logic. Then investigation will start, and we will start looking into the custom profiles, such as, we will look into the purpose of the account, who are the account holders, how we will also look into expected activity, and the account size, and we also look into their money in, money out into the different tools. So anybody would like to add more on this? We have already discussed, so much on this.
I think we are fairly
Him,
clear on this part. We can probably, if nobody has any questions for this particular slide, we can always move on.
Yeah, great. So it
Manoj here.
is, yeah, sure, yeah, Manoj.
As everyone rightly said, I just want to add some more points on this because there is a a separate field how this triggers has been generated. I just
Okay.
want to give a background how it is generated, especially because everyone rightly said what is that after what we have to do after the generation of the trigger. So a trigger generally everyone uses two rules. One is soft rules and hard rules. Hard rules are like the rules which are initially given to the system, where so for example, this is the threshold which if it is breached means then raise a trigger and show it to me. So that is hard rule which is initially be given to the system. So when it comes to the soft rules, again there are soft rules are divided into two types, where peer profiling and individual profiling. Individual profiling is where customer is compared with the customer itself. For example, someone said Nandakumar or Praveen, they rightly said, for example, customer in the last 1 year or 2 years, they didn't use any check debit or check credit or any wire credit from different region or different country. So that is where the individual profiling comes into picture. Customer is compared with the customer itself, and there is a different scenario where customer activity is seen in the account, then a trigger will be generated. And peer profiling is where customer activity is compared with the customer, another customer. For example, I'm an employee where I'm getting a regular salary credit. So all the employees in particular company or particular specific domain is compared with each other. So if there is different type of scenario or different type of transaction is occurred in the customer account, then automatically system throws an alert. So these are some of the rules and regulations where we initially give to the system, and system will automatically logically scrutinize all the transactions and activities of the customer, and they throw an alert. So something is uh, happening apart from the normal activity. So here the transaction monitoring comes into the picture. So what we have to do, what we have customer is doing exactly on that domain. So not only the transaction, we try to see source of funds and the utilization of the funds. So for example, if customer is doing a debit to a certain individual with certain amount of 50,000 pounds or 50,000 pounds or 100,000 pounds, so what is the source of funds for it? How the customer is funding for the transaction, and to whom he is sending? What is the relationship between the customer and the counterparty? So logically, it should appear as legal and it makes sense. Otherwise, we cannot judge stating that okay, customer is fine with the activity. So we have to investigate logically source of funds and utilization of funds. Not only the source of funds and utilization of funds, but also the relationship between the customer and the counterparties. For example, if customer is into one line of business and the customer on the other end is doing another line of business, then it doesn't make any sense, because customer is into in retail business and other customer is into some different business in different region. So logically, it should be in line with the customer business profiles, and source of funds and utilization of funds also should be fine. So otherwise, we try to escalate it to the next levels of investigation, where they use certain different access websites and other sources to see the information, and they will take a decision accordingly, and it may result to SAR filing or STR filing from the banks or the financial institutions. So to validate this information, generally we use different websites called WorldCheck, LexisNexis, RTC, because there is there any certain negative information is there on the customer or any of the counterparts of the customer is transacting, and other details of the customer. So generally, we try to access this information from different websites as well as bank internal applications to validate the information, as well as the confirming whether customer is in line with the business of the bank or not. I hope this is fine. If anyone has questions, you can please ask.
Manoj, I have a query. So, for example, in transaction monitoring, one of the retail customer or individual customer is a salaried employee and he is also a very wealthy customer. But you see his transaction history is only ATM withdrawals, which are very heavy ATM withdrawals. So what kind of monitoring or review you will just do on those type of transactions or accounts?
a really good question, Hemant. Generally, for ATM withdrawals, that is really a big task where we generally see the customer base, like what is the permanent address of the customer and where the customer is living actually. So if we see the ATM withdrawals within the boundaries of the customer residing place, then that is fine. Okay, because customer is maybe withdrawing for his general and living expenses. If customer is going here and there, going 100 kilometers or 500 kilometers from the place where customer is residing and doing multiple ATM withdrawals, and it is frequently doing, that makes really anomalous activities going on. So that comes where generally if we see the multiple ATM withdrawals in customer account, the source of funds may be maybe not right. Maybe it is coming from different individual from different country. So we
Yeah.
can easily judge depends upon the customer activity, where here customer is doing in multiple ATM withdrawals in different regions where customer is not residing, and the source of funds on the other hand is coming from an individual where there is no name match or any relationship between the customer and the counterparty, and there is no previous activity from the same counterparty from last 2 years or 3 years. So then we can easily identify that something anomalous activity is doing. Customer is getting funds from different country and using these funds in different places to withdraw those amounts. As well as in the same on the other part, for example, we see the scenarios and certain situations where customer is getting one pound on each day on different individuals. So for example, if customer have to get an amount, it should be like 5,000 pounds or 2,000 pounds. It's like a 3 transactions or 4 transactions maximum. So one pound from different multiple individuals, and it is from different countries and different modes of payments. For example, one customer is sending through online, some another customer is sending through a check, some another customer is sending through a wire credit or a NEFT transactions like that. So it doesn't make any sense because customer is doing some anomalous activity where we are not aware of it. Generally, we try to reach out of RM because RM knows, relationship manager knows what customer is exactly into. So generally, we
Yes.
don't try to reach out to the customers because it's like a tipping off where we are giving information to the customer stating that we are investigating your account, and it might get to star filing. So customer may be, he will aware of it, and he will make some changes on his account, and he may exit the relationship with the bank. So generally we do not try to reach out RM in transaction monitoring. Every analyst or every investigator does, and we try to reach out RM. Even RM not aware of it, we generally try to reach out to another teams where exactly where they can give information and may it results to the SAR filing. And each scenario is different investigation, where investigation is not same for each scenario. We have different scenarios. For example, large reportable credits where a huge chunk of amount is coming from a high risk country or maybe tax haven country, where customer is normal salaried employed and getting 2,000 3,000 pounds per month, and a big chunk of amount like 100,000 pounds 200,000 pounds from a high risk country, and large reportable debits, cash withdrawals, wire credits, wire debits from high risk countries, and potential structuring, multiple ATM withdrawals. So there are so many n number of scenarios where investigation differs from each and every scenarios. And KYC plays an important role because KYC information really helps to transaction monitoring investigators or transaction monitoring people, because we certainly take decisions based upon the KYC of the customer. So without KYC, we cannot judge what customer is exactly doing. So if KYC is in right place, then transaction monitoring will be easy for doing investigation, and we can judge. So the judgment would be right. If KYC is wrong, if KYC is not updated properly, the transaction monitoring would be, maybe it goes in a wrong way. So KYC also plays an important role in the transaction monitoring, where it's a base for the investigator to look into the customer details and take exact decision whether it is an suspicious activity or not an suspicious activity.
Okay.
As Manoj said, it's very case specific, as well as that is one of the best examples, because all the accounts are not suspicious, and we shouldn't suspect all the customers. However, it is the investigator's duty to identify any unusuality in the activity. And the example what we have taken now, it can be a business misuse as well. A customer who is running a business using a personal, his or her personal account for business purpose. So it can be the product what the customer has taken is a savings account. However, when you look into the activity, it is more like business. So making payments to different clients, and also the cash deposits is predominantly seen at at regular intervals. So we do not know. The customer may not be doing any illegal activity. However, the product for what the customer has taken and for what he or she is using is for a different purpose. So it can be classified as a business misuse. So here the KYC, as we have initially we were talking about the KYC. The KYC is one thing which is very important, and the client onboarding or the CDD team who does the initial work, it will definitely help the investigation team in future, because when the customer is onboarded 3 or 4 years back, a periodic review may not happen in few of the banks or for on few of the customers. So what happens at the time of account opening, the customer may be drawing some amount of salary, 5,000 USD or XYZ amount. After few years, he or she may get promoted, and or he must have changed the job. When we look into the KYC, the customer will be working with JPMC, for example. After few years, when you look into the activity, you see a salary credit from HSBC. So there is a change. When you look into the activity, there is a remittance from HSBC every month. So when we look into the KYC, it is JPMC. So why that customer is receiving funds from a different company? Since these two are well-noted companies, they'll not remit funds to any individual just like that. So it is understood that the customer has shifted or changed job. So there is a regular salary credit seen from this entity. So like that, we can take a decision. For example, if the entity is an unknown entity and a small organization where it is a nondescript organization, we do not know in Google when you search in public domains search engine, you will not know what that company is into. So if the customer is doing a part-time or some odd jobs, they keep changing jobs. At the time of account opening, you have information, some information, and when you look into the transactions now, you have different. So this is where the KYC really makes, helps us in investigation. So KYC is one thing which will definitely help the investigation to take a decision. So I would say the KYC or the client onboarding or CDD department, CDD, whatever they does, is very important and very critical to take any decision. When we come to the commercial banking, there again it differs, because although we have complete information about the entity, the business entity, the turnover and the clientele the business is having keeps changing from year to year. When an alert is triggered on one particular business, at that particular point of time, you have the old KYC which is updated 2 or 3 years back. When that account is opened, the turnover will be of some XYZ. When you see now, it is 4 or 5 times it has increased. So suddenly there is an increase when you look into the credit turnover. The activity, there is a surge in activity. So the business must have grown, or the clientele must have increased. So in such cases, we may ask for an updated KYC or something like that. So KYC is something which is very important to take a decision.
Okay. Okay. And one more query from my side, Nanda. So once you conclude that individual is using his savings account for using his for business, so what actions you take, what review will you take on that type of accounts?
Yeah, because it is also specific to bank to bank. So what usually we do is we inform the branch. We will inform the RM that this is what we have seen in the account. So RM
Okay.
in the sense the branch. So we inform the branch that this kind of activity we are seeing, this kind of business activity we are seeing in this particular account. So the customer will be called for an interview, or that is entirely a different subject, because we as an
Okay.
investigators are we do not know what is happening at the other end. So
Okay.
they will what I mean, as far as I know, is they will ask the customer to refrain from using his or her personal account for business purpose. So they will be asked to open a business account or a current account
Or a
for
checking
business, or
account in US. Yeah.
the customer will be asked to provide the business details. So that is entirely a different platform. How that is handled, it lies with the front end business. So they
Okay.
gather information and they will provide. They will ask for the trade license or any business incorporation certificate and all these documents they ask. So that will be provided to us. So where we look into the KYC part and we will conclude it accordingly. Because earlier we used to classify those types of activities as business misuse in the investigation. So later, I mean, some, I mean, warning letters are also sent to customers if we see that activity is continuous, and in spite of inform the customer is using the account for business purpose. In such cases, we send a warning letter. Even after sending a warning letter, if the customer is continuing that, eventually the account can be closed.
Okay.
It's always with the business part. I mean, it's always lies with the business, and it's that decision will be taken by them. The investigator's duty is to identify and inform. This is what we have seen, and rest is
Okay.
I mean, rest is to the bank. So
Okay.
even the SAR reporting. So when you have identified any unusuality happening in the account, from your side, you have gathered all the information. You have done world check. You have gathered. You have searched in Google and other search engines that information. You have found negative information. So all these information you will gather, and you will say that whatever activity you have seen is a potential, I mean, unusuality is seen in the account. So you will, in your investigative case narrative, you will say that based on these factors, there is an unusual activity happening in the account, which you are not able to justify. And again, that is decision lies with the next level. So if it is in the third level or level three, and that is the final stage. At level 2, most of the investigation happens, and level 3, individual personnel will have access to some other applications where level 2 may not have, because that will be country specific, because those applications may not be access may not be given to people who are working offshore. So they take a decision whether a suspicious activity report can be generated on that account or not. So entirely that is a different subject, and
Okay.
we do not know whether what happened later, because
Okay.
I'm talking from my bank's perspective or any other bank. uh, the level 1 and level 2 investigators may not know what is happening after a SAR is filed, because that is again it's a critical information which will be, if whatever information L1 and level 1 and level 2 needs to know, we will be knowing. So what is not required, we will be kept under dark. So that is
Okay.
all again from that perspective it happens.
Okay.
That is how it goes.
Okay. Thank you so much for sharing the great detailed information on the SAR and all other information. So moving to the last point, the first 2 points we have already covered. The last point I feel that in transaction monitoring, how do we set up rules or defining the rules in a tools is also plays a prominent role, throwing an alert to us and to investigators. Uh, so everybody agrees on that point.
Yes, Hemant,
Uh,
agreed.
So yeah. So moving to the next slide now. 1 second, my laptop got freezed. Could you please wait for a minute? I will just go through the. Okay, here we are. So the key components of transaction monitoring, as we already discussed, the transaction monitoring system comprises of the following two components: monitoring performed by staff who directly deal with customer, for example, relationship manager or a teller who directly interact with the customer, or a frontline staff who directly, I mean, interact with the customer, know his profile, know his transaction behavior. I mean, majority of the part they know it, and the regular reviews of past transaction to detect unusual activity, which is backend. I mean, team which us who I mean investigate which when alert is throws when alert comes up. So, any queries on this slide?
No, Hemant.
Okay. So I think we already discussed this slide as well. This is so monitoring by frontline or staff are the best persons, who know the about the customers and the typical pattern of transaction activities. They are in the best position to identify the unusual activities or unusual transaction patterns. An effective monitoring system therefore includes the provision of regular training to frontline staff to foster a high level AML and CFT awareness in them. The training provided should cover the AML CFT risk associated with the operations for which the frontline staff are responsible. And I also feel that training is also very important, from the analyst point of view as well as the senior management point of view as well. Moving to the next.
Exactly.
Yeah, because if there is a open role in transaction monitoring team, and we are unable to find anyone from the external or outsider, so we were decided to move an team member from the KYC perspective. So he did not given any proper training, and he were told to start. I mean, start right away to start his investigation. So he failed some point of time. I mean, he is not that much effective. So training
Uh,
also plays. Yeah, please.
other hand, front end staff or branch staff plays an important role in the transaction monitoring, like analysis. For example, if customers walking into a branch and wants to deposit $10,000 in his account, so after teller or a cashier notifying stating that you have to fill the another form where you have to give the information where what is the source of funds for that amount. Again, after knowing that, customer rejects, like, I don't want to deposit this, and may go back. So that comes where customer or the staff of the branch or the staff of the bank feel anomalous, where customer would reject that thing and they went back. So where they have the right to file unusual activity report internally. So that makes some helpful for the transaction monitoring team, where see what is the past activity of that account holder, and whether what is the transactions that the customer does previously, and how many years the customer is banking with a particular bank or the financial institution, and easily we can judge based upon that UAR report. So in that way also we can identify fraudsters and money launderers to cash hold, and we can exit the relationship with the bank. So a front end staff make much more difference, and they plays very important role, and the training to the staff members is really useful. They are the staff members where they can detect and they have face to face interaction with the customers, and they plays
Yeah.
very important role in identifying fraudsters and money launderers.
Okay, great.
As
So
said, UARs, the unusual activity reports, which are actually a manual alert sent by the bank branch, especially the branch. So any customer who is regularly, I mean, the movements captured on the CC camera, or the staff who have noticed the customer who is regularly visiting the branch, and if the customer is reluctant to give certain information, usually manual uh, alert is generated triggered on that individual. So those are again treated as alerts, but however the investigation, the methodology a little differs, because the customer who is regularly depositing cash just before the close of the branch every day, and when you look at the appearance, you see he is very tired and a little worried and sweating. So such things are noticed by the branch. So they give a clear description that this customer walked in at this time and making a deposit of this much, these many pounds or euros at this time. So this is a regular activity seen, and this much amount is deposited on this day. So the amount involved may not be huge. However, we suspect by his or her appearance, we suspect. And when we ask for some information that how this money is, what is the source for this cash, the customers usually, I mean, he may not give enough information, so which is not satisfactory. In such cases, what the teller does is he or she will create a manual alert or an unusual activity report, that is called UAR. They give a description of the customer and they send it to the transaction monitoring team. So thereafter, the investigation goes on.
Yeah. So moving to the next slide now. So this false positive alerts we have already discussed in our discussion and with the example. So once alerts are generated, we will start investigating it and we will look into the customer profile, that is purpose of opening account and all those details. Most of the time transactions are compared with peer group profiles, as Manoj already explained everything on that. And now I think all this we have already completed. These are some of the examples of suspicious activity, and we have already discussed everything on these examples as well. So first examples are, transactions between unrelated parties, between business parties and individuals, and the other one is nature of account. For example, salaried individual making regular cash deposits, cash in wire out on some same day, one credit and multiple wire transfer to individuals, integration level third stage of money laundering, over invoice and under invoicing in case of exports and imports, client income as low on account activity application, but we see the high account activity in terms of money flow, and generally they open account with cash for minimum amount and slowly deposit money into. So all these things we have already covered. So we have already, I mean, we come to an end to our session. If you have any feedback or suggestions, please feel free to write to our group email ID, which you can see on your screen. And if you can also reach out to me on my WhatsApp number. Thanks, yeah, thank you so much everyone for joining us. And next session will be any queries till now, what we have covered. We can discuss it right away.
Yeah, Hemant, I'm sure that all the group members have highlighted this, but I just wanted to reconfirm this. See, once the the activities are the transactions are identified, so would there be any kind of due diligence checks will be initiated again, and all the any kind of other related documents have to be I mean, post monitoring this they have to be submitted back to the relation manager, or somebody would be taking care in the place.
Yes, we may ask for the documentation if required, because uh, as I told you, at the time of account opening, the KYC whatever the customer provides may not be an updated one. So if required, we will ask for documentation. For example, the branch usually says the scans certain documents and says that this is sale of property. So we do not know whether the sale of property has happened or not. So we may ask for the deed, sale deed. So it's something like that. We
And
do
I mean,
ask.
it depends upon the type of transaction and the information level. What you required, we can request to the relationship manager, to the front office on to I mean to the offshore onshore team. So they may get a declaration in the form of an email, or they can provide us a document.
Thank you, guys.
Okay. So anyone has any queries or so one
Yes.
more important, yeah, yes, Manoj.
Go ahead, please.
Hello.
Yes, Hemant. Uh, Just want to add one more point on that the question that recently asked. Not only that, for example, generally we try to give triggers to the KYC team as well, doing periodic review or doing taking customer KYC documents again, because in the examples which we discussed in the meeting, generally customer may change his employer or the job which he recently moved to another job. Generally, in that case, we try to take the appointment letter of the recent employer, and not only that, the business in the corporate accounts or the big business accounts, so they try to change their business activity. For example, nowadays these people is into some tire or rubber business, they might change into different type of business suddenly. So here comes an anomalous activity where we feel, and again, we try to go ahead to the RM and take the confirmation stating that with these people are in the same business or they change the business. If they change the business, we need the confirmation and the documents. So after we seeing all those things and updating the customer details, then we try to take the decision whether it is fine with the activity or not, and we try to escalate to the next levels and close the activity with our end. So it depends upon the scenario to scenario.
Yeah.
Yes, so thanks for the clarification. But just one aspect, which just triggered in my mind, saying that are there any kind of scenarios, let's say a company is working corporate, a commercial, and then you see that there's a surge, in the workforce, right, in the labors. Let's say, they have increased the headcounts of the employees. So would there also be any kind of, TDDs, performed, as such on those levels?
Sorry, I can't get you. You are asking the accounts of the particular business
No,
or the
business as in, let's say a business, which a limited company or anything, such, wherein they've increased, their workforce. So can that also be triggered, as such, any kind of transactions amounting TDDs as such?
workforce we
Hello.
don't bother about. Hello.
Okay.
Hello, guys. Can I answer that question on behalf of the group, please?
Definitely, go ahead. Definitely.
Okay. Now the thing is, brother, see, if the
I think
company,
there is
we are
a
only.
issue with the internet.
Hello.
It's clearly audible.
Yeah, we can hear you.
Okay. Now the thing is, during our customer profiling or agent profiling for that matter, or the company profiling for that matter, and only information what we have about the company is the license copy or the registration copy, MOA, AOA, key holders, key shareholder details and all that. We don't have any idea apart from media search or apart from public domain search, which talks about the strength of the company, which is over and above our due diligence or a part of, you can say, adverse media screening. Okay, if anything, if the company during a course of time increases the workforce for that matter, maybe he's coming up with a new plant or a new project where he employed more 100 people or 1,000 people for that particular plant or for that particular project, bank is not aware about it, or the financial institution is not aware about it. So because we are not monitoring we are not into that kind of monitoring where we are also looking at the current profile changes or the new projects or plans which the companies is coming up with. But having said that, if the owner of the company is coming to open salary accounts of all that 100 employees or all the 1,000 employees which are increased in the workforce from the existing employees count, and coming up to open a salary account, then obviously the re-KYC cycle will always come into picture, where we'll say what is the new project, what are the necessary licenses, or what are the necessary clarification or approvals you have for opening up this new project, what are the KYC of the salary persons you are there, what are the employee details, and so on and so forth. So that time only, when the company comes and approaches the bank and asks, like, I want to open 100 more accounts for my employees because I have come up with a new project or new activity altogether, then only this kind of monitoring or the re KYC part will come into picture. Other than that, we will not be aware about like whether the company is expanding, whether the company has gone into export or something, or that sort, unless and until it's a very big company, just like Reliance or Microsoft or Google or something, where there are plenty of information available on the public domain or the public search itself. I hope it clarifies your
Oh
question.
yes, definitely.
Yes.
Thanks. Yeah.
Okay,
Thank
so
you.
I think we have concluded our great workshop, and we have downloaded. I believe that we have downloaded so much of information. So thank you so much for your everyone for joining us. And the next topic is, the artificial intelligence, or if, nowadays, everybody speaks about RPA, which is robotic process automation, or to the matter automation. So we will have workshop on this topic, which how it is connected to KYC, and how do we do care or RPA or artificial intelligence through KYC or AML. So
Hemant, thanks, for this information.
yeah,
I also had one question. Just want to check, among this group, any group, they are already started working on this account onboarding, through these AI channels or through KYC channels?
I mean, could you speak specific? I mean, I did not understood your query actually.
No,
You
what I was
asked,
trying to say is, for example, we have introduced robotics, process automation. So
okay,
what we have understood, in the industry, this helps us out, in doing an automation, in the sense as in onboarding, client onboarding,
okay,
not involving any manual process, but as in, involving, the backend process, which is more kind of
okay,
automated automation.
yeah, yeah,
So at
yes,
least
yes, yes,
the effort is, is reduced to, let's say, 40 to 60%, at least,
okay,
what a human is does. So I just want to, very keen interested to understand from the group if they've already started,
yes.
any of the organization, they have already started working on this, but how was their
One,
experience,
Okay. Okay.
yeah, I
Not
can
not
say.
only that, like not only that part, like where the RBA or artificial intelligence comes into picture, but I'm also interested for someone who has already started or working on
Correct.
Bitcoins
Yes.
trading or something related to blockchain and all that, using blockchain for money remittance or transferring funds. So that would be quite useful for us because this is quite new in the in this
Market.
particular scenario, and also
Yes.
in this market, and the environment is changing very frequently, and digital, it is going digitalized, and all these transactions are happening in within a friction of seconds with the help of blockchain. Many banks are coming up with this blockchain technology. Maybe ICICI Bank and Emirates and BD Bank recently did a blockchain transaction for making an import payment or something of that sort. So if anyone has an experience of blockchain or witnessed or a part of that group which is under the process of making this internal improvement, that would be quite helpful if we can get a session or a 15-minute session or a 20-minute session for that matter.
Maybe a 2 hour session will be good. I mean, covering the artificial intelligence, blockchain, and RPA as well. So, and also I'm also looking for, any courses or any kind of certification suggestions as well. For example, if I'm interested in to join the technology part of KYC or AML to the matter, so I can also go through the course or join those course. So all everything, guidance on those type of platform, I'm also finding I'm on the way to find some SMEs on those, or who are already on those type of projects. So I'm just finding, and I mean, I have to find speakers on those type of platforms. So I'm
Maybe
looking, if you,
in our group
yeah.
must have done it. We don't know. We need to check
Yeah,
in the
yeah,
group itself.
yeah. Once we complete this workshop, I will just check right away and start preparing for that. And I also request everyone to please contribute to the next session. And to be honest with you, the next session might take 2 weeks of gap or 3 weeks to come in to organize all this information in one PPT, and ask the speakers about their convenient time. So,
Okay, no
uh,
problem.
okay. So,
artificial intelligence and robotics has been implemented or not. I
Yeah.
cannot take my company, but take the name of the company. However, yes, it is started, and the companies are on full swing. They are using artificial intelligence in the business. So,
Okay.
especially for transaction and customer name screening, our AI is being
Okay.
so even to the transaction monitoring as well. This will definitely be used, and there there is a threat that there may be a reduce in the headcount. So
Okay.
we can, because technology will definitely take over.
Yeah.
So and the skill and
Yes,
the
sir.
able will definitely continue jobs. There is no threat for the skill that.
But I'm
Okay.
not
rapid
sure,
change in AML
if this
transaction.
if it's just a myth or as such. But people say that it can completely replace the manual labors. But nobody knows at the moment. It can really replace 100% of the process. I
I
think it's
don't
only
think so. It will
However,
happen.
Obviously, just to add to
institution,
that,
yes,
like obviously they are supposed to process the request, but ultimate decision has to come through a human mind, whether to reject it, whether to report it, or all that has to come through a human mind. Maybe the manual process will get rejected, obviously, categorizing it, bucketing it, and all that. But the ground of suspicion has to be prepared by the individual, analyzing the different scenarios. I don't think it will
yes.
affect to that extent, but nevertheless, we have to see, we have to wait and watch.
Yeah. Okay, guys. Thank you so much, and thanks for
Thank you.
joining us. Bye. Have a
Bye,
nice.
everyone.
Bye.
Thank you,
Have a
everyone,
nice
very much.
Sunday.
Bye.
Bye.
month.
Bye.